Hey everybody, good morning. How we doing out there? Welcome to the Daily Target 100 live trading room. My name is Doc Severson. Today is Thursday, the 28th of July. Welcome aboard. And we're back to live trading after some pretty low stress sim trading over the last couple of days. All right, let's see what's going on for today's session. We did have GDP coming out this morning, and it was actually negative, as had been rumored. Interesting, right? So negative 0.9%, 2 straight quarters in a row with negative GDP, although everybody's trying to it's not that bad. And actually, the market's behaving itself quite nicely today. This is the first day after the Fed day that we have not had a big sell-off so far. So it looked like it was getting started on that this morning, but so far has recovered, and we've gone positive on the S&Ps for the day so far. We'll see. I'm thinking that today may end up just being a range-bound doji day, which would be okay with me. We're now looking forward at the 21 September Fed Funds Futures, which is almost 2 months away. I think it's like 7 weeks away from the next meeting. Good morning, Bill. And right now we're looking at about a 50 basis point rate hike. But as we know, anything could happen in the long period of time between then and now. Who knows? Maybe we're going to be looking at easing by that time. You don't know. Like if you look at the bond market today, the bond market is starting to weaken in terms of yields. Bond market's looking forward. The Fed is looking behind them and trying to play catch up. They missed the train at the train station. They're running down the tracks, chasing after the caboose, is kind of the feeling I get. And it's always that way with the Fed. All right, today we had, last night we had the company formerly known as Facebook reporting earnings, and it was not good. A little bit of a bloodbath. They've recovered somewhat since then. This morning we had Southwest Airlines, Altria, we had MasterCard, Valero, which are important, but nothing like what Apple and Amazon represents to the market tonight. And then also Intel, especially to the Dow, Roku, U.S. Steel, really, really important. And this is peak risk for the summer. It really is. This is peak risk for the summer. Everything tones down after this point. The market's kind of going to be on its own for the month of August. There's no Fed meetings going on. Not to say that the most dangerous place in the planet is going to be between a microphone and a Fed speaker. Oh, there's a boom. So don't stand in the way. And they're going to be moving the market around based on James Bullard is particularly infamous for doing this. So watch out for any time that he's slated to give a speech, because we could get some volatility. All right. We will be here the rest of this week, next week as well, too, at 11 o'clock Eastern time. Until further notice, I think the first time that I have some away time will be, I believe, the week of, let me consult my high-tech paper calendar here. The week of August 22nd, I'm going to be up in the state of Maine, state of confusion, something like that. And I'm going to try to do a remote session from up there. We don't know what kind of internet we have or anything like that. I may be on a porch somewhere with the seagulls in the background, which would be kind of cool. So we'll see what happens, but no other time scheduled past that. All right, today we're going to go right back into it. Today I will take your questions afterwards. I'm going to go straight into the 10 wide and 25 wide. We'll get those positions in play. Send them out to the rest of the population here, and then if there's any Q&A session after that, I'll be happy to do that. Okay. So without further ado, away we go. Let's look at the markets. Let's see what's going on right now. So let's see. Here is the SPX. Let's see. We are going to go out to the standard daily chart at this point. And I'm just going to look at the ES for right now. But it looks like what we've done is we didn't really save ourselves from a whole lot of harm by sitting to the sideline. Yeah, we got a pretty big day yesterday, but I think you could have been able to trade around that quite well. And so you can see today's candle is just kind of like a little bit of a rangy, drifty candle we can see what's going on in the range for today. Okay, so we had here is today's opening range. The opening range was actually quite weak as we gapped up and then we gave back all of that. We closed the gap today, and then we flirted with the lower expected move, which is that lower blue line for the day, but that held up as support, and now we seem to be back in accumulation mode today. I'm anticipating that we'll probably spend most of the day within the opening range, which is rather large, actually. But that's what we're expecting to do. So that's actually a big change from the last two times that we had Fed meeting results coming up, where the day afterwards, it was a bloodbath. Positive the day of the Fed, the next day, huge reversal. And the market loves to do this. It's like, okay, here we go again. Here we go again. And this is why you can never, this is the way the market started off this morning. And understanding how to read price action does help, because if you're unable to put in a lower low, which that did there, and then all of a sudden you start going to higher highs and higher lows, you get a reversal. And so it helps to understand what the price is doing. So right now, price is moving along, and the longer that I talk, the more the time value goes out. So let's get in gear here and get started. So I'm going to go out to the SPX. Tick chart, please. Larry, what would you like with a tick chart? Let me know what you need with the tick chart. So today we're going to go out to 3 August. So I'm going to count out the days. 1, 2, 3, 4, 5. So there's 5 trading days. Counting today as 1. We're going to use the 3 August options today. And lately, the long pole in the tent, the challenge has been finding strike prices that we can trade, which are far enough out. And so if I go to the 3 delta here, there's 4,200, 4,250. That's 50 wide. Ouch. The closest 25 wide that I can do is 4175. 4175. So I have an option here is that I can just put in the put spreads for today and maybe see if I can get call spreads tomorrow. I can also put in call spreads, but they're going to be much closer. And I do run the risk with this current trend of getting run over with those. So that is something that we're going to have to think through. So the most distant 10 wides that I can get, 10 wide spreads that I can get, is 4150, 4160. Now, something else that I can do, and I haven't really thought about this too much, but we could actually go with, no, we can't. I was going to say we can go with 5 wides up there to reduce our risk. Good morning, Scott. So let's see what we have for the 4150, 4160. That's a 10 delta. So that's significantly closer than we normally go with. So our vertical spread up there, 4150, 4160, is going to pay 95 cents. If we look for net 15 cents, we could put this order in at 95, or in this case 85, and look for 15 cents of movement. We could put our limit order in for 70 cents. So that's one way to do it. The other way to do it is we just don't enter the call side, or we see if they print additional strikes sometime tomorrow. So this is the challenge that we're going to run into, I think, this summer. It seems like when we trade on Mondays for Friday options, we don't have this problem. There's plenty of strike prices available. It's when we run into the back week that we run into this problem. The back week is usually where we have the unpopulated call sides for this. So that's the closest I can get. And if you look at that, we would need to do a defensive stop out when the price hits 4,100. So how do I like that with the SPX? Hitting 4,100, that only gives me 70 points of room before I have to make a defensive adjustment. Okay, I don't like that too much, although we're going to have to get used to that if we have the implied volatility. Carl is asking, what about a 60-75? So we go with a wider spread, which is further out. Do we do something like that? 60-75, that's an 8 delta. That only gives us 10 points more room. And the problem here is that the reason why we're doing 10-point wide spreads is because of smaller accounts. So we start widening out the spread and we make it tougher for people because there is more risk in a $15 wide spread. So if anything, if we're going to do 10 wides, we would go down to 5 if there was a 5 wide spread here. But I don't see one. The only 5 wide spread I see here is at 16 delta, 16 to 15, 41.25 to 41.30. Switch to the spiders. Well, we're not going to do that just yet, Scott. We're not going to do that just yet. I will leave that as an exercise for the reader if you want to. But let me go down to the put spreads and let's see what we can do down here. See what kind of trouble we can get into. The thing that we can do is, I mean, if the market's going to grind higher, we can just put the put spreads on and then see if we want to put on a call spread later on. Or if we start to see distribution tomorrow, if we start to see the market just puking all over itself tomorrow, then it becomes much easier to add the call spreads because we'll have, the price will be down into the strikes that we can play. Okay, so I want to start out with the most distant, and I'm going to do what Keith suggested yesterday, is I'm going to go out to a more, let's see, that's in display. Decimal places for Greek, so I'm going to go out to 3 decimal place, apply these settings. So we're going to go out to 0.029 here and see if we can do a 37.85, 37.75. Okay, 20 cents credit. Let me see what's the chart is showing here. 37.85. That's way down here. I like that. That's pretty good. That's got one major level of support down here at 3,900 at a pivot. So pivots are important. Okay, but we're going to have to go just a little bit closer than that. This is not paying enough. 15 cents a credit. We want 25. So we're going to move this out to 37.90. Move this closer, I should say. 37.90, 37.80. 20 cents a credit. We're still going to need to move a little bit closer. We're going to go 37.95 and 37.85. We're going to go to the first strike that pays us 25 cents. And we don't have it yet. Let's see. We're going to have to, I'm going to move up to 38.05. 38.05, 37.95. And there we go. There's our 25 cents. So I'm going to lock this in and see if I can get a fill at 38.05, 37.95. And it looks like it's not going to fill me there. I'll give it a shot. Let's see if we can do that. So once I get this filled, I'm going to have to go quickly into the 25 wides, see what I can do on the 25 wides, and get the trades out. I don't think this is going to fill because it just went down from 20 cents from here. Yeah, so the mark is at 22.5. So let's cancel this and let's move out to 38.10. $38.10, 3,800. Let's give that a shot. Yeah, we're seeing a rally right now, and this is why I'm chasing after the market right now. And this is why I'm not all that excited about entering the call spreads right now. So let's get this in play. All right, let's try this 25 wide. That's selling the 38.15, 38.05. Okay, so we got that in play. Let me copy this into the room. Okay, so that's our 10 wide. And that's the only 10 wide trade I'm going to put on right now because of the missing strikes and the calls. So now what I'm going to do is I'm going to bring down my E-Trade interface, and we're going to do the same thing with E-Trade. So we're going to go to the August 3rd, and let's see what we got to work with on the call spreads. I'm going to watch the delta here. Here's the call spreads. And it looks like we can do, boy, these are pretty thin as well too. Best I can do is 4175, 4200. Let's see how this plays out. And that's $1.10. That is pretty heavy. Okay, so $1.10. And that's, approximately double the delta we normally go with. So that only gives me, I would have to make a defensive adjustment or a defensive exit at 41.25. Let's see where that is on the chart. 41.25, which is not that far away. I think we can afford to wait on these as well too. Again, if the price drops like a stone tomorrow, then we can chase after the call spreads that we want and we can neutralize the trade. But for right now, I think what we do is we look for the put spreads that we want. Okay, so the other ones that I did was, what was that, 38.15. Let me try the 3800. These are going to be a little bit more forgiving. You can go a little bit further out of the money with these. Now, what was that? Okay, so we're going to sell 3,800 and we're going to buy the 37.75. And that's pretty close. That's a 47.5, 45 cent midpoint. That's not too bad. Let's go down one strike here. Let's see if we can get that. Let's see if we can nail that midpoint. Okay, so there we go. There's a 40 cent midpoint. 37.95, 37.70. That's 25 wide. Let's see if we can get that trade into play. And that is filled. Okay, so we have filled both of these. So let me copy this one in there for you guys. And give me a second here. I got to get the emails out and alert everybody. And in the meantime, if you have any questions you want to load up or queue up into the room, that'd be cool. So go ahead and do that. So give me about 2 minutes here and I should be back with you here. Okay. About halfway there. Hang on. All right, everybody. I'm back. All right, so let's see what's happening here. Now, before I go too much further, I need to go ahead and clean up on everything that we're doing here. Okay, so I'm going to take the SPX, and what I'd like to do for these is I'd like to group these guys. So I'm going to take the two new options that I put on here and move them to a group, and this is a group, and I'm going to call these the 3 August T100. Okay, so here it is, 3 August T100. We have the 3805 put long, we have the 3815 put short, and I'm going to just mark these two trades. I'm going to highlight them too, create a closing order, and we're going to buy this back for 10 cents. Limit, good till cancel. Because we got filled for 25, we're going to be looking for a 10-cent limit order, confirm and send. We're going to buy this one back for 10 cents, good till cancel. That is correct. Okay, so we're good there. And let's go ahead and do the same thing to the E-Trade. Okay, so E-Trade, our SPX vertical is down here. And the first thing I want to do is group this, just in case I end up getting, you always want to group these things when you can, so you don't confuse the broker and make them think that you have a complicated position. Okay, so this put vertical down here, I'm going to hit the close, and we're going to do the same thing. Limit debit is going to be 10 cents. Duration is good till canceled. And we're going to preview buy one, 37.70, 37.95, put vertical, 10 cents, and send it off. There we go. Okay, so guys, if I get filled on those, I'm not going to be sending out trade alerts. Those are just normal trade fills. It's only if we do something out of the ordinary that we're going to be sending out trade updates, like especially if we take a defensive close like I did last Friday, where I said, hey, I've got an opportunity to close out the rest of the inventory for the weekend, and I don't, this represents a good way to sleep over the weekend, so I'm going to go ahead and take it. So I'll send out updates on those. But for the 10-cent closes, you guys should all be seeing about the same closing rates on those. Now, there's one other thing that I want to do. Okay, actually, a couple of things I want to do here before I get to your questions. Let's do a little bit more homework here and set this up. So All right. Our trade entry on this was approximately 11:14. So what I'm going to do is I'm going to do a quick journaling on this. So the 10 wide was 11:14 a.m. and the SPX at entry. Let's get that and the expected move. Look at this thing go. So 11:14 SPX was roughly, let's just say 40.34. All right. And for our 3 August options, the expected move is, oh, yes. That's nice. I like that. The expected move, I just got out of another trade at target. So our expected move is 84.6. All right, let me bring over the sheet again. 84.6. So our lowest expected move into this is 39.49. So what I'm looking at is, if I look at the price that we entered of this, a 1 standard deviation move to the downside is going to hit 39.49. A 1 standard deviation move to the upside is going to hit 41.18. So you can see that those are well within probability of being hit, either of those two. But I like the strikes that we got. So 8.3, the short strike in this point is the 38.15. 38.15. So we're well below the short strike or the 1 standard deviation movement of this. Our put spread credit was 25 cents. Call spread credit is 0. Total credit at this point is going to be 25 cents. We can always change this. We can always add the call spreads tomorrow if we see a reason for this. 1 contract. And the gross credit on this so far is 25 cents or 25 bucks. Total risk is going to be $9.75. 2% profit target is $20. We'll see if we can hit that. And now, did I set my limit orders? Yes, I did. So I'm going to check this off. Here's a new thing that I put on board for this one is distance alert set. So with our current distance, the way we're setting distance right now for the static risk management, our static defense is when we're within 50 points of the price, then we're out. So what is my 50-point defensive limit threshold on this? It's going to be 38.65. Right? Do you see that? 38.15 plus 50 points, 38.65. I'm going to go into a standard chart of the S&Ps. And I'm going to go out to something more than a minute. And so 38.65, look at that price go. You go, man. And I'm going to create an alert. It is going to be at or below 38.65. $38.65. So if the price is at or below $38.65, then write yourself a note, because this is what's going to show up in the email. You don't have to greet yourself or anything, but this, so write down what this alert is for, what it is and what it's for. This is the price alert for the 3 August 10 wide SPX T100. So that's what it is. This is the price alert. And then tell yourself what to do. Please remove the 38.05, 38.15 put spread. Now, if that happens today, it will be a relatively expensive exit. If it happens next week, I'd be surprised if we're not out of the trade by next week. But if it happens by next week, it'll be much cheaper, if not still able to pull a profit on this trade. Okay, so that is setting the alert. I think most brokers have this ability. You can do this in TradingView as well too. I can probably do this in E-Trade. I have not yet done it. I like to do all my alerts on one package. Like if you go to MarketWatch, you can see where all your alerts are listed. So you can see this one that I just put here, mark at or below 38.65. I also put in the upper and lower expected move for the week on the spiders, and I've got some additional scans that are showing alerts and things like that. So look at this thing go. This is amazing. I'm kind of glad we only have the put spreads in play today, quite honestly. Now let me journal the other trade that we had. So I'm set to go with this one. We're set to go with this one. And now let's go over to the 25 wide. So I'm going to copy down some of the same information on the 25 wide. So let's see, our history, 1118, 1118, and I'm going to use the same price for this is 40.34. EM at entry was 84.60. So I can just copy a lot of this stuff here. And our put spread was, we filled the 37.95. So that is one advantage of going wider, is that you can typically get a little further out of the money. It more approximates a naked strangle. Put spread credit was 40 cents. We got filled at 40 cents. This is zero. Total credit is going to be 40 cents right now. For now, one contract. Gross credit is 40 bucks. This should be 24.60. Oh, these are real trades today. This is the real deal. Okay, so we set our limit order, right? We already set our limit order. Distance alert. So now my distance alert on this one is going to be slightly different, right? It's going to be 38.45. If I had 37.95 plus 50 points, it's going to be 38.45. So let me go back to Thinkorswim. Even though I'm running the trade in E-Trade, I'm going to go back to Thinkorswim and do the same thing. So 38.45 is where I want to put this. So a little bit more room to work with on this trade. Wider spreads give you a little bit more room, a little bit more bang for the buck, more risk, more reward. Mark is at or below 38.45.0. Once again, the note to yourself should be, what is this? This is the price alert for the 3 August SPX wide T100 on E-Trade. So I'm telling myself what this is. Please remove the 37.70, 37.95 put spread. Okay, the price has come all the way down. It's dropped like a stone, and it's gone below levels of support. We no longer want this trade. We're going to remove it for, in this case, it would probably be a loss if it happens later on this week. It would probably still be a profit, or we'd probably be long gone from this trade if it happens next week. So don't forget, after you close the trade, go ahead and close this alert so you don't get these, superfluous alerts showing up in your email box going, oh my God, I need to do something. Okay, so I'm going to check that. Now I'm going to notify myself with sound, email, mobile. You can also do SMS if you want to do that. Prefer not to. Okay, so I got that alert in there. And so I'm going to go finish off got that alert in E-Trade. And my net credit so far is going to be 31.84. Actually, this is incorrect. The per contract fees are going to be so far $4.08. $4.08. So typically what I'll do is I'll just I shade this white if it's still an open trade. If it's closed, I'll shade it yellow. if it's in the process, if I've got one side of it closed, what I'll do is I'll highlight it like a rose color, like one side of it's closed and not the other side. But for right now, we'll just use white. We've got our limit orders in play. We're done. Okay. We are done with that. So off to your questions. Okay, Larry is asking, can you show the tick chart that you're waiting for 11 a.m. to settle things down before considering a trade? Looked like very congested chart. Well, let's go from the top down. Let's go from the top down. So, and speaking of a congested chart, let's look at this. We do have the potential for a massive move here. And one of the things that we have talked about is when we got close to exhaustion down here at the end of June, early July, this was due to the linearity of this move. So I don't know if you know how this study works. This is the same one that Dave uses. Dave is using something that looks slightly different. And also I go backwards from Dave. Hopefully this is not going to confuse you guys. Monthly, weekly, daily. I go from the left to the right. Dave goes from the right to the left. We're just trying to keep you off balance, that's all. But this linearity, the CHOP index, fractal energy indicator, whatever you want to call it, looks for linearity of the trade. So the more it approximates a straight line, the more that it's going to eat up energy. And the more that it looks like completely random price action is more nonlinear, it's going to increase energy, the potential energy on this. More it's going to bolster energy. So what I've been saying is for the last few weeks is if the price goes higher, it's actually going to increase energy, which is an odd thing to consider. But for right now, yeah. And it can actually do that up until probably up in this area here, which is about 4,200. So we could get a 4,200. Now, if we look at the daily chart is reflecting the energy of this move, and it's not yet at exhaustion yet. But the way that this chart's been moving, it's going to have to go down to maybe the mid-20s before it's going to finally say, time out. Time out, I'm done. So this could be a quick move. This could be a quick move, the way that this is going. So we are, to Larry's question, we are launching from a very congested zone. That spring has been wound up pretty tight. And it's full of potential energy, and it's going to, it's like holding a spring in your hands that you've wound up, and you know that the very second that you let it go, it's going to go, flying out of your hands. So the same thing is happening here. So we're breaking this trend line. We're moving to the upside. This all makes total sense right now. This all makes total sense. So to me, we're owed somewhere between 41 to 4,200. So I'm perfectly okay with today just walking away from the call spreads and saying, couldn't get the ones I wanted, and I don't really care. And we can always add them tomorrow if we start to see the price drop. So that was the first part of the answer to your question, Larry. The second part, if we just go out to this chart here, yeah, this is fairly random action here. That's a pretty big opening range. Normally we don't get them that big. That's, 45 points. That's a very large opening range in the first 30 minutes that we had. But the expected move, here's the lower expected move. So based on the opening print here, we have a lower expected move, and we also have an upper expected move. So it's, you can think of it this way, like if we say that this is the closing bell, this is where we'd expect to see, there's a 1 standard deviation price movement. Here's the probability cone for what we'd expect to see. Again, that's based on this being 4 p.m., which it's not. But just to give you a visual there. So people expect to see, I guess, structure and linearity in price movements intraday, and a lot of times we do not. And this is why I've sort of given up on on thinking that you can predict where price movement is going to go intraday. It can be just crushingly random during the day. But what we do is we're using a couple of framing objects here. We're framing in the price to understand what it's telling us. We're using the opening range. The opening range will help us understand whether it's trending or whether it's range bound. And right now, it started off the day as fairly range bound, although somewhat trending to the downside. And since 10:30, a little over an hour ago, it's been putting it on to the upside. If we look at our market internals, we can see we've made a pretty good reversal in market internals. Like we started off the day somewhat weak and are just, got the pedal to the metal now. Look at the ticks are just increasing. Now we're getting plus 1,200 ticks. That is crazy strong. We do not normally see price movement this strong. Now, what does that tell you? That tells you that everybody was down here looking for the Fed move, the day after the Fed move. Everybody knows that reverses the day after the Fed. Where does the price like to go? It goes in the opposite direction from where everybody thinks it will go. What does the price have to do to screw the greatest number of people? And that, if you can answer that question, that is where the price will go. So I think a lot of people, as after yesterday's big rally and the way that we faded down into the close, and then the way that the price started to fade this morning, a lot of people went short, and they are now begging to buy back their positions. That's adding to the demand. Every day tells a story. Okay, so let's see if I can finish answering Larry. Let's see. Okay, so that is the tick chart I'm using. It's 1,000 ticks. So each candlestick represents 1,000 transactions. Yep, it is congested. Okay, so let me know if there's anything follow up from that. And there you go. Mr. Authentic, or it could be, I don't want to assume anybody's gender on the show here. Where do you get your lowest and highest expected price for the day chart? Okay, so I think if you're talking about expected move, what I'm doing is, what I want to know is where the opening print is. Now, I'm using a sort of a combination between the SPX and the ES futures because, as I've talked about, I love to chart the S&P 500 minis. The S&P 500 E-mini futures. Love to chart those because it's the most liquid instrument out there. It's the home of that, the pits with all the Chicago Mercantile Exchange, the traders out there, and it's massive, right? It's maybe number 2 compared to bonds, but it's the deepest, most liquid market that we have in the equity space, period, without exception, is the S&P 500 futures. So it's really the very best thing to chart for that. But we're trading the SPX. So how do you conceive, what we can do is, as the day starts out, now today's expected move was, for today, I go out to the option chain. And if I look at today's options, which are 28 July, this morning, they were plus and minus 32.26. Now we've lost a lot of, we burned a couple of hours already of the day, and we're down to 22. Plus and minus 22. There's only, it's a matter of physics, right? So what I will do is I will combine this expected move, and that goes from whenever the bell rings until the closing bell, until those options expire, which I think technically those options will expire at 16:15. They stop trading at 16:15 on the SPX. But in essence, when they expire. So I'll combine that number with where does the S&P start trading? And to do that, the easiest way for me to do that is to use a gap chart. So a gap chart is one where I'm looking for gaps Look at that candle. That's outstanding. I'm looking for, so what I want to know is where the opening print is. This morning's opening print was 40.32. Look at the upper left-hand side. All right, so I'm going to put this over here. Watch this area here. Actually, it kept it. So 40.32 is open, high, low, close. So I'm looking for the opening price right at 9:30, right in the very second of 9:30. So that's 40.32. So what does that mean? Okay, out to here. So there's the 40.32 number. And then what I'm going to do is I'm going to take that SPX expected move plus and minus 32 points, and I'm just going to add and subtract it. And actually, I have another tool that I have that I use every day for this. This is my Ironfly worksheet. These are pretty crazy numbers, and I hope we're able to get to this point someday with you guys. Where we're trading 0 DTE. That may happen later on this year. But the profit factor is just crazy on this stuff. But I'm really, really picky about these. I will not just trade them every day like most people do. So these are trading Ironflies right at the money. But I want to see that it's a range-bound day. If it's a range-bound day, then I'll pull the trigger. If it's not, like today, I didn't pull the trigger today. Didn't do the trade. But on Tuesday, I did. So that's how we use the opening range and the expected move to understand kind of the expected range of things. Okay, so that is authentic. And Bob, we answered Bob's question. Larry, you're good. Alan, thank you very much. I appreciate when you guys chat in with each other and talk. I mean, this is what this is for, is that we want to get a community. With the exception of we don't want to do it like Zoom where you got everybody talking at once. Okay, so the short answer is you've created the chart expected move create. Yes. I create this every day. I move these lines around every day. Is there a way to do this automatically? I don't know. That's probably. I mean, what I do is a very mechanical process every day, so therefore it could be done by some algorithm every day. So there's some kind of formula that will automatically generate that chart so that we can use it. The thing here is authentic. I wish I had your name so I don't call you authentic, but it'll be authentic for right now. There is a formula for expected move, but what I find is that it's somewhat different because if I go out to, like, let's do this for instance. If I go to, is it too late to enter the 10 wide? Well, you won't get the same strikes that I did. So there is a benefit to being in the room, because you'll get better execution. You'll see what it is that I'm doing versus waiting for the email to come in. So I don't know if you'll be able to get that same strike, but I would assume not. So the thing here is you can get that expected move from a couple of different places. So if we look at, looking at, again, this is Thinkorswim. Right now we have a 22.27 expected move for today. If we go out to something like Tastyworks and the SPX, we're looking at a 19.4 expected move. So it does seem somewhat random, and I don't know what the algorithm difference is between those two guys. Technically on paper, there is a formula to do that. Or you could also just do what is the at-the-money straddle price. The at-the-money straddle price, if we go to look at this and analyze buying a straddle, which is right there. Here's the at-the-money straddle price, which is $22, which is almost exactly what we're seeing with looking at the Thinkorswim and expected move. So you could take the straddle price. I believe it's the at the money straddle minus the at or the one strike out of the money strangle. I think that's the actual formula for the expected move. But you guys can check me on that. So yeah, authentic. I'd love to be able to do that. I'd love to have some study that just comes up every day and just, boom, there you go. There's your lines for the day. And then it draws out the opening range. And then I don't have anything to do. I don't mind doing it. I think it's important sometimes, like the same reason why they say that journaling on paper with pen and paper is more effective, because it sends a more lasting impression to your brain versus just, hey, I'm going to copy and paste this into Evernote. So me going through the process every day, just sort of, you're sending small subconscious messages to your brain that you did the work, right? So are you going to trust that trade if you did the work versus an algorithm just sets up some lines on a chart and your brain has to take those at face value? We're getting very close to the upper expected move for today. That is super strong, and we are still seeing some strong internals, still seeing some really strong prints that are up here above 1,000, which is really surprising. That is somebody in pain. Somebody's getting taken out behind the woodshed. That's that kind of pain that you're seeing. Markets move because of somebody's getting hurt. Markets move because somebody's getting hurt. Okay, guys, that's all I got for today. If you have any other questions, you're welcome to shoot them into the support line, support@12minutetrading.com, and I'd be happy to answer them for you. Otherwise, we will see you tomorrow. I don't have any intention on adding any other trades today. So all I have is just our exit debits in there. And if they fire, they fire. If not, we'll come back tomorrow and do it again. All right. Thanks, everybody. Have a great Thursday. Everybody, be good. Or be good at it. See you tomorrow.